Kieran Jenkins there. Well, the Bank of England has come under fire from politicians for failing to deal with inflation. And senior Conservative MPs have accused it of fairy tale forecasting. I put that to the bank's decision maker, its Governor Andrew Bailey, when I met him earlier today to talk about the impact of all of this on people already struggling with the cost of living crisis.
What is the growing risk of recession in the UK? In the dim shadows cast by a looming economic crisis, the United Kingdom finds itself on the precipice of a perilous recession. A tale of financial woes and unprecedented challenges unfolds as we navigate through the intricate web of economic factors, political maneuvers, and societal ripples. Buckle up as we delve into the intricacies of why the UK's economy is teetering on the edge, indicated by the sharpest monthly fall in private sector activity since the financial crisis. The data provided by S&P Global and the Chartered Institute of Procurement and Supply reveals a significant drop in the UK's dominant service sector and manufacturing output in September. This decline is attributed to higher interest rates and the cost of living crisis impacting consumer demand. The Purchasing Managers' Index recorded its steepest decrease since March 2009, excluding disruptions caused by the COVID-19 pandemic. The Bank of England, considering the economic challenges, decided to halt its aggressive interest rate increases, holding borrowing costs at 5.25%. The private sector's total new work fell for the third consecutive month, with businesses citing pressures from the cost of living and higher borrowing costs. The S&P Global or SIP's UK PMI Composite Output Index dropped from 48.6 in August to 46.8 in September, indicating contraction. Analysts, including Mike Bell of JP Morgan Asset Management, connect the weak survey data to the Bank of England's decision not to raise rates further, as the impact of previous rate hikes starts to affect the economy. The article highlights concerns about a potential recession, with the PMI data suggesting a quarterly contraction of approximately 0.4%. Separate figures for retail sales in Great Britain show a modest recovery in consumer spending in August. The contraction in Britain's economy in October, with gross domestic product falling by 0.3% from September, as reported by the Office for National Statistics. This contraction raises concerns about the possibility of a recession. The decline is attributed to exceptionally wet weather, which may have impacted the data. The reaction in financial markets includes a drop in the value of sterling against the US dollar and the euro. Investors are increasing their bets on the Bank of England cutting interest rates in June 2024. The yield on 10-year British government bonds has also fallen to its lowest level since May. Despite these economic challenges, the BOE is expected to maintain the bank rate at 5.25% and emphasize its commitment to controlling inflation, which stood at 4.6% in October. Analysts such as Paul Dale suggest that the October data raises the possibility of a recession, which might influence the BOE's stance on interest rates in the near future. As the economic narrative unravels, the Bank of England takes center stage in an attempt to steer the ship away from the impending storm. With a historic decline knocking on the door and recession fears echoing through the financial corridors, the Bank of England responds with a bold move, an interest rate hike to 1.75%. It's a double-edged sword, aiming to combat persistent inflation but raising concerns about its impact on the most vulnerable in society. The stage is set with a grim prediction, the highest inflation since 1980. An energy shock contributing to the rising inflation adds fuel to the fire. The warning bells ring not only for the immediate impact, but for the potential second-round effects that could exacerbate an already dire situation. The least well-off in society bear the brunt, as living standards face the prospect of the biggest fall on record. Amidst this economic turmoil, energy prices surge, and the regulator tweaks caps every 3 months, thrusting the public into the unforgiving cycle of more frequent hikes in energy bills. The harsh reality of bills tripling sends shockwaves not only through wallets, but also raises concerns about the mental well-being of individuals facing this financial strain. Charities, ever watchful of societal welfare, issue dire warnings of a catastrophe in the looming winter. The public, grappling with the shocking economic figures, looks to the government for reassurance. However, the government's support of £37 billion remains a vague promise, lacking concrete details on how it will alleviate the struggles of households caught in the economic crossfire. In the midst of this economic quagmire, a leadership transition unfolds. A caretaker government navigates the ship, while the upcoming change in leadership casts a cloud of uncertainty. Criticism mounts as the Prime Minister enjoys a holiday during the economic crisis, leaving many questioning the dedication to steer the nation through these turbulent waters. Political debates and hustings gain prominence, with conservative leadership candidates participating in TV showdowns. Amid the chaos, an interview with Bank of England Governor Andrew Bailey sheds light on the rationale behind the interest rate hike. Bailey acknowledges the impact on low incomes, but underscores the necessity to prevent inflation from becoming deeply entrenched. Economists weigh in, offering diverse perspectives on the Bank of England's decision. Roger Bootle provides an assessment, highlighting the challenges posed by external factors. Concerns about potential deflation and the urgent need for government action echo through the words of experts who grapple with the enormity of the situation. As the political drama unfolds, the absence of the Prime Minister and Chancellor during the economic crisis raises eyebrows. The lack of concrete details from the government regarding support measures amplifies the uncertainty. Conservative MP Mel Stride, in an interview, supports Rishi Sunak, defending Sunak's handling of economic challenges and assuring the maintenance of the Bank of England's independence. Yet concerns emerge about Liz Truss's stance on revisiting the bank's mandates. The distinction between healthy debates on objectives and dangerous interference in independence becomes a focal point of discussions. In the realm of inflation, the Consumer Price Index takes center stage. The latest figures reveal a staggering 4.2% increase, marking the highest inflation rate since 1980. Energy prices, a critical component of the inflation narrative, witness an unprecedented spike. The regulator's decision to adjust caps every 3 months sets the stage for a relentless climb in energy bills. For households already grappling with financial strains, the prospect of bills tripling becomes a harsh reality, sending shockwaves through communities. In the landscape of living standards, the Resolution Foundation delivers a sobering prediction: the largest fall in living standards on record. The least affluent in society face the brunt, navigating through an economic storm that threatens to erode the progress made in previous years. This decline poses not only financial challenges, but also raises concerns about the widening gap between economic classes. The focus shifts to the cornerstone of economic stability, the Bank of England. The decision to raise interest rates to 1.75% reverberates through the financial markets. Analysts pore over economic indicators, scrutinizing the potential impact on businesses and households. As the interest rate hike aims to curb inflation, the challenge lies in striking a delicate balance that prevents a free fall while safeguarding the most vulnerable. A closer look at the energy sector reveals the intricacies of the crisis. Gas prices surge to unprecedented levels, triggering a domino effect across industries. From manufacturing to transportation, businesses grapple with the ripple effects of soaring energy costs. The resilience of the economy is put to the test as companies navigate through a landscape fraught with challenges. Charities, at the forefront of social welfare, highlight the looming catastrophe as winter approaches. The combination of rising energy bills and declining living standards paints a grim picture. Mental health concerns rise as individuals and families confront the harsh realities of economic strain. The plea for government intervention grows louder as the winter chill amplifies the urgency for immediate action. Government support, a beacon of hope for many, stands at £37 billion. However, the lack of detailed plans raises skepticism. The public awaits clarity on how this financial aid will be distributed and who will benefit. The absence of a comprehensive strategy adds to the prevailing uncertainty, leaving families in suspense during these tumultuous times. Leadership transitions add another layer of complexity to the narrative. A caretaker government attempts to navigate the storm, but the impending change in leadership fuels uncertainty. The absence of the Prime Minister and Chancellor during a critical economic juncture raises questions about the government's commitment to steering the nation through troubled waters. In the realm of political discourse, conservative leadership candidates engage in televised debates. Economists, the architects of economic analysis, offer diverse perspectives. Roger Bootle, in his assessment, underscores the challenges posed by external factors. The debate intensifies as calls for radical reform of the Bank of England's mandate gain traction. The delicate balance between independence and accountability becomes a centerpiece of discussions. Like, share, and subscribe to stay tuned to the unfolding saga of the UK economy.